Hi, this is Don Vallee with the Valley Gold Team in Tucson, Arizona. Today I have Jason Rose joining us from Nova Home Loans. And Nova is the largest mortgage banker in Southern Arizona. So Jason, why don't you introduce yourself to our folks?
Thanks, Don. My name is Jason Rose. I've been with Nova for 16 years now, so I've seen a lot of change within the company. And as you said, we're the largest mortgage banker in Southern Arizona, and we've enjoyed a lot of success here recently, and especially navigating through current times and some challenges that we've had.
So Jason and I are here today to kind of just give you the facts. Again, there's enough people on the news media speculating how this is all going to unfold with this coronavirus issue and this pandemic we're dealing with. But Jason and I are here to give you the facts about the real estate market and lending as it relates to the real estate market, because I think there are a lot of people out there that believe there's not much activity going on. So let me give you some month-end statistics, and I'll give you last week's statistics. At the close of the first quarter, we were 3.3% ahead in unit sales in Tucson MLS. Days on market went from 46 down to 37, meaning as our inventory is shrinking, stuff's selling faster. We have a 1.8 month supply citywide of houses. That means for the number of houses we sell, the number of active listings we have less than a 2-month supply. A balanced market is a 6-month supply. So we have virtually no inventory. And that's been most of the country for most of the last 6-7 months of the year. In the past 6 months, actually in Tucson, we've had the lowest inventory levels, inventory being active listings, that we've had since we've been keeping track of numbers. So basically, we believe that we're in a good position to recover very quickly because our inventory is not very high. Last week, again, MLS-wide, citywide, last week we sold 322 homes. And new listings, we took 396 new listings. So it's not the pace we're used to, but it's certainly not zero. So Jason, why don't you give us a report from the lending standpoint and mortgage broker standpoint on how the market is.
You know, on the lending side, Don, there's a portion of the market that's functioning very normally. I think the media tends to use a very wide brush, especially right now when they're talking about lending and the fact that lending is getting tougher and standards are tightening. For a majority of people that are looking at conventional financing, the market again is very normal. The Federal Reserve has done a really good job in providing liquidity to the markets, which is helping our industry, and we're operating very efficiently. Conventional financing goes all the way up to a loan limit of $510,000 in Pima County. So if you're borrowing up to $510,000, it's going to be a very normal process, almost business as usual. And on top of that, we're seeing historic rates that we didn't see back in 08, 09. So these are really some of the lows that we've seen, and again, still operating very efficiently. There are some segments of the market that have been impacted by this, and most of that impact is because as part of the stimulus that's been passed, folks can have a forbearance on their mortgage, meaning that, you know, if you're unable to make your mortgage payment, you can defer that payment. And really that's sort of what's upset certain segments of the market. But that's more the government loans, which they had a credit score increase on those loan programs because you know, they want to make sure that they're offering loans to consumers that are a little bit more sound and safe. But other than the government loans and the what we call non-conforming loans, which are loans above $510,000, the market is really functioning very efficiently right now. And I wouldn't say that people are going to have difficulties participating in getting a loan when they're, you know, within the conforming loan limits.
Thank you very much, Jason. You know, we're getting reports from people that the standards are tightening, as you said, I think. What are some ways that we can kind of prepare the consumer for what to expect as the lending rules tighten up? Will they see it themselves?
Yeah, the tightening has really occurred more so on the government loans, which are FHA loans and VA loans. And we saw a shift in a credit score increase to a 640 middle score as the baseline to get qualified in those programs. And so that's probably the biggest shift that we've seen in the marketplace. Again, other than that, Fannie Mae and Freddie Mac, which are the agencies that purchase most of the conventional financing that we do, are functioning normally right now. So I think if folks are interested in either getting a VA loan or getting an FHA loan, the main thing they need to be aware of is some credit score requirements that have been increased. But other than that, those programs are functioning normally too. The jumbo loans or non-conforming loans are still available. The rates aren't as good right now as they were, but we expect that to normalize as things continue to get better here in the coming weeks.
Excellent. Well, thank you very much for your time. Thank you very much for joining us today, Jason. I appreciate it.
You're welcome.
So I'm Don Vallee with the Vallee Gold Team in Tucson. If you need to reach out to us, best number for us is 520-544-5555. And if you want to reach out, get a refi or some information from the lending side from Jason, Jason can be reached at 520-275-1882. Thanks for joining us today and make it a great day.
Thank you.